It's still saying that I'm in a practice session and there are no new people registering.
Okay, wait, sorry. But why? I don't know. Just a second.
It says we're live on YouTube, but unfortunately it's not working as a live session and not accepting new listeners to the Zoom at this stage. So we do seem to have a challenge with the hub settings. Great. Thank you, Letitia. Thank you, everyone who is dialing in at this stage. We are waiting until everyone is able to log in. If you're able to, you will see participant numbers climbing at the bottom of the screen. We will get going properly after we give people time to be part of this. But you are in the right place. This is the launch of the Climate Aligned Bonds report from Climate Bonds Initiative, sponsored by DBS Bank in Singapore. And this report was launched earlier today in European timeframe, afternoon in Singapore timeframe. It's live. It's on the Climate Bonds website now as we speak. This is, of course, a webinar to discuss the implications, the opportunities that arise out of what we covered in this webinar. So you're in the right place. Hang fire for a couple of minutes until we get going formally. For those of you that would like to ask a question, note that there is a Q&A, question and answer button at the bottom of your screen. At any stage, you can ask a question. We will attempt to answer them. They might be answered in text. We have a couple of staff on board who will be looking at them and answering where we can provide simple answers. And I will pick up a few questions to take to our panelists during the course of the call. So do ask away and let's see if we can respond. Letitia, you'll have to tell me when you think the numbers are ready to get started. This webinar is being live cast on YouTube. So it is possible to search on YouTube for Climate Aligned Bonds, Climate Bonds Initiative, and you will find the live cast and watch it that way. And note, of course, that will be recorded. So you'll be able to look at this webinar again if you want to, or more to the point, refer it to friends and colleagues who might find it interesting should you think it's useful. And the recording will stay up there after this date. So our guests today are about to be immortalized in the digital universe, which means every word they say will be there forever. I'm looking at you, Clifford. Okay, we might get going on that case. I think, Letitia, or have I got an okay?
Yes, Sean, we have almost half of the attendees, so I think we're good to start.
Okay, folks, you know what the challenge we face is. We have an extraordinary challenge in terms of addressing what's happening with climate change. As a result of the US President's Climate Summit in April this year, we saw many countries come to the fore and announce targets for 2030, all the major economies of the world, in fact, which are commensurate with what the IPCC, the Intergovernmental Panel on Climate Change, has been saying for some time is what we must achieve to even have a reasonable chance of avoiding catastrophic climate change. And that's cuts globally of some 50% in the next few years by 2030. That's the challenge we face in front of us. There are, of course, at the same time, a need to invest in adaptation measures because we're beginning to feel the impacts of climate change. The extraordinary heat bubble over Canada and Northwest US in the last week was matched by snow falling in southern Brazil at the same time. Very unusual incidences. Bushfires, wildfires in Australia, droughts in different parts of the world, floods in Bangladesh, these are all part of the same phenomena. We are starting to experience the physical effects of the climate change actually way earlier than our climate scientists have been telling us for the last 30 years. This is unnerving. It puts extra energy behind the urgent need to reduce our emissions across our economies in quick time. This particular report is a focus around bonds that are what we call climate aligned. These are investments that could be made which in assets or bonds that are going to projects and assets which are commensurate or material to addressing our climate targets. There's a lot more in the actual report. You can read about the methodology behind it. The link to that report we posted in the chat and the Q&A during the course of this webinar. You can read it yourself. It's fantastic. We have a lead author, Amanda Giorgio, with us, who is a senior research analyst at Climate Bonds Initiative, who will present in a minute. But before we get there, I'd like to cut to Yolanda Chong, who's the head of sustainability and institutional and banking group at DBS Bank in Singapore, and an old friend who's been working, I'm going to say, on climate change and sustainability issues for longer than most of us have been eating sliced bread, right from the days of Climate Change Capital many years ago. And I'm excited to have you here, Yolanda. Can you tell us your thoughts on this area, and of course, why DBS is looking at this space now? What do you see?
Yes, Sean, you are betraying my age here. So I can see 131 participants already know that. Of course, we've known each other for a long time. Speaking of extraordinary challenge, I've known Sean from having black hair to now silver hair. So this is what it takes to really tackle the climate challenge. Joking aside, it is very important, and we feel very privileged at DBS, a bank that is headquartered in Singapore, and our core market is Asia, to talk about climate-aligned bond issuances. Amanda is going to explain the report and the methodology behind it. It is really credible to look at bond issuances that could have been labeled green and tackling climate mitigation and adaptation, but at the moment not. Now, we will learn that this is more than just a relabeling exercise when we go from climate aligned to having a legitimate label, because with the label, that actually comes with greater scrutiny. For the issuers participating at the webinar here, don't look at that scrutiny as the extra burden. Look at it as an opportunity to really beef up your transparency of the disclosure, to really fine-tune your strategy, communicate your strategy to investors, all the things that investors like to know. And it will be a golden opportunity not to consider having a legitimate climate or green label when you could have. And with that, back to you, Sean.
Thank you, Yolanda. And I have to say, thank you, DBS, for both your support for this project, but I'm going to say for your enthusiasm too. I know you've published an internal taxonomy to drive issuance. We've had some discussions about that in the past. You've been trying to grow this market aggressively, bring people into it, and promote understanding of climate change. And for that, I think we all have a vote of thanks for you. Amanda Giorgio, who's the Senior Research Analyst at Climate Bonds Initiative and the principal author of this report. Amanda, it's your turn. Show us what's in the report. Give us an idea.
Hello, everyone. Thanks, Sean, for the introduction, and thanks, everyone, for participating today. It's very exciting to be here and presenting the 8th edition of our climate-aligned research, which has been a year in the making. So it is indeed quite of a time-intensive product, and I am very excited to be able to take you through the main insights and highlights today. But before I do that, I also want to thank our fellow panelists today. It's a great panel. Thanks for being here. And of course, our sponsor, DBS Bank. And last but not least, I would like to thank all the analysts and the team which have supported the development of the report. It has been incredibly valuable. So in the interest of time, I'm going to try to be as quick as possible. But I am, of course, happy to take any questions at the end, or feel free to type them in the Q&A. So let's start with what is this report about, really? As Sean and Yolanda already introduced, this report is about unlabeled climate-aligned bonds. These bonds are bonds which finance climate-aligned activities, but are not labeled as green by the issuer. This universe differs from the labeled bond universe or the thematic bond universe, where we see green, social, and sustainability bonds. These bonds are specifically labeled by the issuers and finance specific green, social, or sustainability projects. So for the purpose of this report, we define climate-aligned activities within our climate-aligned activities tables, which you're going to be able to find in the report Annex 2, and are based on our well-known climate bonds taxonomy. But let's talk about why we do this in the first place. So we want to shed light on capital flows which finance green and climate-aligned assets, which extend beyond the labeled bond universe. And we've seen there are more opportunities out there. And of course, this will inevitably help dedicated investors to find these additional investment opportunities. Last but not least, our research provides insights on the potential growth of the labeled bond market, in that some of the climate-aligned bonds could actually be labeled under the green, social, or sustainability label. But let's talk about how we actually find these bonds. I mean, they're unlabeled, so we've probably been wondering how we find them in the first place. So our research is actually based on two key phases. First one is the issuer screening, which is then followed by the identification of climate-aligned bonds. So climate-aligned bonds are defined at the issuer level. This means that we start from a pool of eligible climate-aligned issuers, and then we analyze their revenue streams, and we try to determine what is the percentage of such revenue streams which are linked to climate-aligned activities. We then classify these issuers in two types. The fully aligned issuers must derive at least 95% of the revenues from climate-aligned activities. Then we have the strongly aligned issuers, which must derive at least 75% of the revenues from, again, climate-aligned activities. Any issuers which does not, or rather, which derives less than 75% of revenues from these activities are excluded from the purpose of our research. Once the analysis is done, and this part is actually the most time-intensive part of the analysis, in the sense that we actually went through 2,000 companies, of which only 420 ended up being climate aligned. And after we've done this phase, we then find their bonds. So for fully aligned issuers, as you can also see from our flow chart, we consider their entire outstanding debt as climate aligned. For strongly aligned issuers, we actually use a different approach. So we use a pro rata alignment approach, which means that we apply their percentage alignment to their outstanding debt. For instance, if a company is 80% aligned, then we'll take 80% of their outstanding debt and we'll consider that climate aligned. The combination of outstanding debt from fully aligned issuers and strongly aligned issuers is determined to be the climate aligned outstanding bond universe. So it's also worth noting that for the purpose of our analysis, we only based ourselves on publicly available sources of information. These could be annual reports, sustainability reports, or on occasion websites. Also worth noting that data presented is as of Q3 2020, starting from January 1st, 2005, which corresponds to the year of the Kyoto Protocol ratification. But now let's talk through the key highlights of our findings. So in our research, we actually discovered over 913 billion USD of outstanding climate aligned bonds and over $1 trillion of USD climate aligned bonds issued, which is quite remarkable. At the moment, our labeled universe accounts for 1.7 billion, which means that the climate aligned debt accounts for approximately half of that. So our research is global. So we actually found 420 issuers, which are based across 45 countries, and of which these climate aligned issuers, approximately 3/4 are fully aligned and 1/4 is strongly aligned. Let's have a look at regional issuance. So as you can see from the charts on the right-hand side, Asia Pacific leads issuance, followed by Europe and North America. It's worth noting that out of the total issuance from Asia Pacific, approximately 74% comes from China, which is source of remarkable climate-aligned issuance. This is also shown in the table on the left-hand side, where you can see that China alone accounts for 36% of the overall climate-aligned debt. France and the United States follow at the second and third place. Let's talk about climate theme. Climate theme corresponds to the business activities where our climate-aligned issuers operate. As you can see, transport dominates the market with over 50% of the outstanding climate-aligned debt, which is then followed by energy and water. If we look at the regional spread of such activities, then you can see that transport is quite evenly spread, and it mainly, it's quite well found in Asia Pacific. And it's worth noting that actually 90% of the climate-aligned debt from transport comes from railway company, which are predominantly available in our universe. So these are the main findings that we found during our research. But as always, like every research challenges, we encounter a few challenges. So the first one is that the data is difficult to find, and this is mainly due to a lack of standardization across annual reports and sustainability reports, for instance. So one of the main challenge was that we found it quite difficult to determine the green revenues which come from business which are very highly diversified. And it's also quite difficult to determine the availability, it's quite difficult to determine the green credentials of such business activities because details are not as transparent as the ones that, for instance, we find in the labeled bond market. So a few, let's say, solutions proposed. Climate-aligned issuers might as well consider issuing their debt with the labeled bonds. This would indeed enhance transparency and minimize greenwashing in the market. Good news is that 40% of the climate-aligned bonds, which we discovered in our research, will mature by 2024, which is in the short term, I would say, which really offers opportunities to such issuers to refinance themselves in the green bond market and then help scaling up the thematic bond market. Finally, another, let's say, solution to the problem would be to increase standardized reporting practice and also harmonize green definitions, which would really allow us to compare the data more easily and to find the green revenues that we're really looking at. In this respect, we expect increased issuance from Europe, especially in light of the EU taxonomy regulations, which brings with it the EU taxonomy, which sets clear definition of what constitute green activities, as well as the sustainability reporting standards, such as the non-financial reporting directive, for instance, which clarifies what kind of information should be released in annual reports by companies so that this information is more available. So we hope to see similar developments in the rest of the world so that this instrument will really become more visible for all the stakeholders and the investors as well. So thank you everyone for listening in. And of course, we would like to hear your feedback, and you could do so by sending an email to markets@climatebonds.net. And if you have any questions, feel free to drop them in the Q&A. Thank you for listening.
Thank you, everyone. Thank you, Amanda. Don't forget to post the report in the chat box for everyone now, Amanda, so you can all read it. Now, we have a panel. I am privileged to have with us today Calvin Kwek, who's a senior environmental specialist at the Asian Infrastructure Investment Bank and in Beijing. And some of you may not realize, but the Asian Infrastructure Investment Bank is not only doing lending, it's also doing investing. That's what we're going to hear about in a minute. Clifford Lee, who's the Managing Director and Global Head of Fixed Income Treasury and Markets at DBS Bank, based in Singapore. Robert Eigen here, who's the head of capital markets and head of treasury and asset management at Eurofema, which is the agency which is funding rail transport development across Europe, an incredibly important agency in the history of rail in Europe. And Letitia Hammond from the head of the, or who's the head of the sustainable finance, I'm sorry, Letitia, at the Luxembourg Stock Exchange. I get confused because really it's the Luxembourg Green Exchange that I'm interested in, that I'm focused on, and that you've been focused on as well. And of course, the Luxembourg has been a leader in this idea of creating a green exchange, which is now so important in the European context. Thanks for joining us today. Calvin, I'd like to start with you, if I may. Look, let's be honest. You represent the investors today because you have a program of investing as well as in lending. Can you tell us a little bit more about that and tell us about the climate focus, the climate interest that AIIB has?
Thanks, Sean. And first off, I would say that you run on renewable energy. You have amazing energy and you've built an amazing organization. So testament to you and your team and the great work you've been doing. AIIB, as anyone knows, was founded about 5 years ago, soon after the Paris Climate Change Accord. And so it's in our DNA to be supportive of our members meeting their Paris commitments and so forth. And as an infrastructure bank, we mainly invest in project finance, but increasingly capital markets play an important role in the financing of infrastructure. So not only do we do traditional project finance, but we also invest our money into fixed income instruments such as green bonds and climate bonds and so forth. So it's becoming a very interesting market. And I think the challenge for us now going forward is to ensure that the green labels and the various taxonomies and methodologies which are used to align with Paris or with addressing climate change really do end up meeting what the scientists are saying, which is a peaking of carbon and ultimately a net zeroing of carbon by a certain date in the future. That's something that certainly keeps us up at night right now, because there's certainly a proliferation of standards that have come out the last several years. Your CBI standard is highly credible, but there are also other ways of looking at this particular topic. The CBI standard looks particularly at revenues. The other ways of looking at assets, for example. The other ways looking at, say, third-party suppliers and so forth. Ultimately, it comes down, I think, to what the scientists are saying in terms of what is really going to address climate change, and that's really reducing emissions. So long story short, AIIB is committed to helping our members address climate change, and to that effect, last year with the organization's help, the CBI, and with the partnership with Amundi, we launched the Climate Change Investment Framework, which is a public good that allows investors to look at their portfolios and to measure the alignment of various capital market instruments according to the 3 pillars of the Paris climate change: adaptation, mitigation, and measuring financial flows. So a lot of stuff on the table, Sean. Let's see that it's not all, let's hope that's not all greenwashing. So let's see what happens.
Well, that's again an interesting question. We'll get to that in a minute. But thank you, Calvin. Clifford, you've got, well, at least from my perspective, the job of growing a green and climate-related market in DBS. I realize you've got a day job as well, but in this particular task, what do you see as the opportunities suggested by this report, and I guess the challenges in bringing some of these companies into the thematic universe, the green universe, for example?
Thanks, Sean. Maybe it's as a matter of background, I'll tell you what my team does on a day-to-day basis.
That'd be great.
Clearly, we look after the fixed income business for the bank globally. We rank among the top 10 arrangers of G3 bonds across Asia. So that's what we do. We engage issuers as well as investors. And of late, in the context of our discussions now, green bonds, social bonds, sustainability bonds becomes more and more important. Now, the changing mindset over the years, many years ago, when they were looking at it, a lot of it was taken with a bit of concern, a bit of skepticism, a bit of indifference maybe 5, 6, 7 years ago. But as we grow of the recent years, and especially when we went into COVID-19 and the pandemic stress we've seen last year, it somehow has built the awareness and the concerns to the front, meaning that it's no longer just talking, it's no longer just for reporting. It's something that is of top of mind of issuers to make sure that whatever they do is climate friendly, is good to the society, and all that becomes real. So against that, we are entering I would say, a new and deeper level of awareness across Asia. And when Asian issuers come out, you see global investors participate. So that's the opportunity. Now, this report in itself is exciting to me, because the more I understand it, and again, hearing Amanda articulate it even clearer ways, what it shows is that first and foremost, in an objective third-party assessment of the market, you found a certain number of climate-aligned, non-labeled issuers and companies. And these are assessed against actual business activities. So, there's no effort on their part to so-called greenwash anything, right? Because it's observed from the market. And it's very encouraging to see that 48% of it comes from Asia Pacific, and China being 36%, being the country of which most of this has been identified. Now, I can tell you, Sean, that as we share this with our clients and issuers, there'll be a few responses. The first response, I'd say, is one of surprise, because in terms of actual labeled green bond issuance, Asia lags the rest of the world. So the general impression would be because the activities here isn't up to par. That's a very simple assumption, and they imagine themselves so far away to be able to do something to move the needle. It'll be harder for them. But in actual fact, this research has shown that actually many of them already have activities that can be seen to be climate aligned. Now, the next step is therefore to, first and foremost, for them to understand this, that they're closer to promoting best market practices in the GSS area than they thought they were before. So from that standpoint, we'll be able to engage them and get them even more, get them to pay even more attention to this, to actually put in place, and Yolanda works with our clients very closely, put in place an ESG agenda for the issuers. And from there, then to start structuring and issuing bonds and be held accountable to those standards. And in so doing, they will be able to help grow this market more in terms of Asia. The pace of growth in issuance is extremely quick already, even though from an absolute number, it is still lagging the rest of the world. Now, first and foremost, you have this. Secondly, you also have investors, whereby their own demands in terms of making sure that their investment portfolio stands the scrutiny of the best market practice in terms of ESG observations, right? ESG best market observations. So you can see the whole market evolving in that space, whereby awareness in this area cannot be just cursory. It must be something that's deeper and something that really affects actual behavior to be more climate aligned in their activities, to make sure that their business activities, their investments have that focus over and above the financial well-being of the company. So I think that this report can be used to bring that out in the discussions and to be able to move the needle a lot more going forward. So I'm very excited to share this with issuers in the market and investors alike. They're waiting to see more of such supply, like Kevin has said, into the space, because they too have a need to make sure that they have theme labeled and best market structured GSS bonds in their portfolio.
Well, that's great to hear that developments out there. I want to say that you're right about Asia in general, although of course China is now the world's second largest bond market and is also the world's second largest green bond market.
Yes.
Largely thanks to regulatory shift. Now, I know there's a big difference between the two, but in terms of relative performance, slightly different driver, not so much investor driven by regulators. And we've been working at the People's Bank of China for, I think, 7 years now on how to grow this market. So it's important to note. So that story hasn't fully escaped China yet. And this is, of course, what we're in the middle of seeing now. Although we have seen some pretty amazing issuance in ASEAN, in Hong Kong, in India, and in Japan over the last few years. So in each of those sectors, the market is growing. And my friend F. Amatong at the Philippine Securities Commissioner regularly likes to tell the story of the Filipino bank who issued green bonds and Swiss francs who got negative interest rates. First time in history for a Filipino bank. He is still shocked about it, and it's 3 years later now. So stuff is happening. The question is how we actually grow it globally in those regions. One of the things that we've been doing with the European Commission has been looking at a common ground taxonomy between Europe and China under the umbrella of the International Platform on Sustainable Finance, which is a European convened coalition, which includes Singapore and China as members of that. And we'll be rolling that out in September. And I guess the interesting thing will be the bringing together of those markets and the implications for other markets around. Of course, in Europe, the green and sustainable finance market and the climate aligned market, that is bonds that clearly qualify, the issuer hasn't necessarily claimed them as green, has been going for some time. And the archetypal issuer in this space is Eurofima. That is a body set up specifically to finance rail investments in Europe. It's been issuing for a long time. Robert can fill us in a minute. And of course, has then also pursued a carve out of green bonds, which I'm interested to hear about why and how that worked. But Robert Eigenhier, you're treasurer, you're the treasurer in this particular space. Tell us about your program generally and your green program and what led you to roll out a green related program.
Yes, first of all, Amanda and Sean, thank you very much for this report. That's excellent work, and I encourage everybody to read that. It's a very interesting piece. And also thank you for the question regarding green bonds and climate aligned issuance in the railway sector. I think if you consider to issue green or non-green, also non-labeled bonds, you always have to consider the costs and the benefits. And I think that's also important, for example, for us, why we issue green or non-green or others do so. For us, it's really, we see the benefits because it's a pricing advantage. It's the core of Eurofima to issue sustainability, to promote sustainability in the market. And that's why we decided to target at least 80% of our issuance in green bond. And why only 80 and not 100? And we really said it needs to be the most strict rule that we can apply. And for example, I don't know if you know exactly Europe, but you have a lot of electrified tracks. So basically the power used is electricity. But you also have rural areas where you don't have these electrified tracks, and then basically you use diesel as a power. And we said even though diesel is, because railway is the most power efficient and one of the cleanest mode of transportation, we said we exclude that from the green bond framework because we want to really apply the most strict rule possible. And that's why the reminder is 20% we really do as a climate aligned issuer. And I think it's also very important to mention a little bit the difference between the issue, so basically the bond, the proceeds that are used for certain project, and then also the issuer, so basically the business model of a company. And if we speak to investors, you basically have two types of investors. One is really the thematic investors. They want to have a green bond and they want to measure exactly the impact. They want to have the data because they also need to report. But you also have the other investors. Basically, they look at the company. What is the ESG standing? What is Eurofima doing in terms of sustainability, environment, social, and governance? And I think that's also important that you not only work on one front in order to only issue green, let's say a certain amount, but you work so that's basically harmonized. And that's also why we emphasized a lot on the ESG rating, and we achieved the top 5 in the world out of 15,000 companies. And that's really both together are interlinked. So if you want to work on climate alignment, you need to work on the internal strategy, on the business model, but also then issue green bonds in our case. And when we also speak a little bit about the future or the development of the market, I think, Amanda, you already said it, it's very difficult to get all the relevant data. So all the issuers, not only the scientists, but also the issuers and governments, etc., need to work together to make the data available, to also make the data transparent and do a harmonization and a comparison. Only this helps us then in order also to assess the effects to the climate. And I think that's really not only the scientists, it's everyone which is involved in the capital markets to basically share the data, make data available in order to increase the efficiency in this market. I hope that was a little bit, in a nutshell, an overview of what we are doing, what we are working on, and how I think that the market is developing.
It's great. There's a little bit of a discussion about refinancing and financing. I will pick up in a minute. But Letitia, you want to ask a question before we go ahead?
It's actually not a question I wanted to ask, but I thought it was interesting what Robert was saying about the type of investors. And so you've got, it's right, the impact investors will really need the data and the impact to demonstrate that. But you also have more general type of ESG investors who are interested more in the issuer's profile of the corporate. And that made me thought about when I was working in investment funds. And in investment fund industry, you can invest in funds that invest in bonds indirectly or in equities. But in bonds, if you're an impact investor, you would invest in labeled bonds. That makes sense. But if you're not an impact investor, if you're an ESG, more general investor, you would look at the profile of the issuer. And in that case, Eurofima checked the 2 boxes, right? Because you have the CAI climate aligned issuer box and the bonds that goes with them, but you also have the labeled bonds. So that makes you a dual upside for investors. And I thought that was interesting.
Yes, thank you.
Sorry, no, go ahead.
Yes, thank you. And that's exactly also our strategy, because we want to promote ourselves as an issuer to invest in sustainable mobility. So all of the investors out there which think about sustainable mobility, they should buy our bonds. Either they are thematic investors in green bonds or they are ESG integration investors, but we want to cover all of them. And that's basically also our strategy, and that's good also that it's acknowledged by the market.
Have you found, Robert, differential demand between when your green formatted something out? I think you were saying that. I just want to tease out how strong that is between your standard one program and once you started using the thematic protocol. To explain that a bit. How have investors reacted? More subscription rates? What are you seeing?
It's very difficult to compare, for example, our green versus our non-green issuance, because it's not only the label that counts, it's also the currency that we issue, the tenor, it's also the format. And that's why it's very difficult to compare. But of course, if you issue in green format, you see investors that you would not have seen in a non-green format, just because of the label. Whereas you see the ESG integration investors in both in the non-green and in the green, because they are not focusing on the label, they are focusing on Eurofima as an issuer. And it's very hard to answer this question, the difference or the impact, because as I said, usually there are also other factors which count. As I said, currency, tenor, and that's why it's also hard to give you an answer on a comparison and also on a development. But of course, if you issue green and on top you want to be a high quality ESG issuer, you have a more meaningful dialogue with the investors. So that definitely increases because the investor engages, they want to understand the business model, they want to understand what the impact is. And I think if you really focus on sustainability, you have a very meaningful dialogue on environmental and social topics with the investors. And that's also what we're looking for, not only for investors, but having also or promoting also sustainability in the financial sector.
So Clifford, we've got to take this story to every single rail company in Asia, haven't we? We need them all in this market. And we'll probably have AIIB interested in their bonds as part of this process, Calvin. Is that a reasonable thing to say? There's a story here to whip up. But look, before we go into that, Letitia, tell us a little bit about the work that the exchange is doing and how you're trying to create a bridge, because you've been looking at green, but you have also got a whole climate aligned segment, so which I know we've helped you to data with, but just tell us what the nature of the demand and the investor interest is.
Sure, yes, thank you, Sean. So when we created indeed the Luxembourg Green Exchange back in 2016, it started with the green bonds. And then we followed the market and we went to social bonds, sustainability bonds, SLBs, and we heard about those climate aligned issuers. And there was an observation on our side where we realized that investors, and particularly in Europe, I can talk for Europe, investors are calling for more supply and diversity of products that can contribute to climate objectives in general, and the goals that you see behind me. But not only because of climate objectives, it's also because investors have made tons of climate pledges. So there's not 1 week where I don't read in the press an investor claiming that he wants to divest from fossil fuel or reach net zero investments, unless it's my cookies on the internet browser, but still, I mean, that's what's happening. And so there's a huge need in there. And to relate with what Clifford said, there's a need for investment in climate, and there's a need for investment in emerging markets, which is also a dual opportunity, I believe, for Asia. So we observed that. And then we were like, okay, we need to do something to make investors aware that there are investment opportunities that are under the radar for the moment because they're not labeled. But we want to give more visibility to that. And that's the reason why we've created that climate aligned issuers section on our website. And of course, we wanted to add a layer of credibility on that. So that's why also we've partnered with the Climate Bond Initiative, because we very much appreciate the methodology that Amanda has explained, that is very robust. And by displaying those climate aligned issuers on that section, and also the bonds that have been issued by those CAI, then we give more visibility to those products. And we can also have an opportunity to explain to investors, so that's an engagement also that we have, can explain that those bonds could also feed some climate strategies of investors. And it's not only because they don't necessarily have only to invest in labeled bonds, but they also can invest in other type of bonds that would meet their requirements. So really that's the purpose of the climate aligned issuer section here.
Look, it's incredibly important that exchanges are getting behind this particular project. And, you know, Luxembourg, whilst being a leader in this space, is not the only one. I mean, we've seen moves by the Singapore Stock Exchange, the Hong Kong Stock Exchange, the New York Stock Exchange, NASDAQ, and of course, the London Stock Exchange recently in this area who've got listings. Fantastic. Because where we get this kind of visibility, the market grows. And also, of course, in many exchanges where we get trading, we get price discovery as part of the whole process. So there's many reasons why this is important. So thank you, Letitia, for that. I want to now go to what have we got to do, a little bit more what to do. So Clifford, I kind of intimated a question to you. How do we bring all of these rail companies, and by that I mean climate aligned companies in general, into the market? What have we got to do now, given we've got such a cool story from Eurofema as an example? I mean, it's in a developed market, and we do know, as you were indicating earlier, Asia's at a different stage of development. What do you think the practical steps are next?
Well, Sean, I'll say something is already evolving naturally. There's moved us past this stage of having issuers think of whether they should do it. It's something they have to do. It's a matter of when and how soon, right?
So this is inevitable.
Way past the stage. Yes, they know, the issuers know this from a few factors. Firstly, like you said, the regulators, the rhetoric that's coming down from the governments as they take part of this global initiative is starting to trickle down. So from a regulatory standpoint, they're starting to feel it. Of course, the more the transparency and the consistency and the reasonableness of the demands also will play an important part to make sure that they can be progressed in accordingly in a meaningful way. From a market standpoint, you're also starting to see the demand from investors. Now, to Robert's point, I empathize. It's very difficult because we speak to issuers and investors all the time, especially issuers. They're always, 5-6 years ago, they'll ask, okay, if I do a green bond, is it cheaper? And most of the time, when you say, oh, well, it may be, you say, no, is it cheaper? And you say no, and suddenly the conversation ends, right? Now, we've progressed way past that, but still the supply is lacking. And because the supply is lacking, you can't have one-for-one comparison to say whether do you have two issuers or two issues from the same issuer, one green and one non-green? Do you have something as easy as that to compare? You don't, right? But of late, we've done a sustainability-linked bond out of Indonesia for a poultry company where they have sustainability performance targets. And we know of investors that came in that actually moved the target, moved the pricing lower. We did a green and geothermal bond for Star Energy, clean energy out of Indonesia, a green bond. And if you compare that to another power plant, which is not in the green sector, you also see it priced tighter. Now, hints of it are coming up. Hints of it are coming up. So from that standpoint, I think it's very encouraging, but we do need more supply. And this is a roundabout way of answering your question. We have to go to, based on this report, those who are naturally able to come to the green bond market sooner rather than later, get their supply to come in the market so that investors can engage and the market can develop faster and further.
So when you say investors engage, do you mean we've got to get Calvin on a roadshow, or is it simple? Look, he needs excuses.
In our world, we go to the investors. So Calvin just has to take the call.
That's a good point. So Calvin, you're now in this unusual situation compared to past roles you've had. And I say this because Calvin has got family in Singapore, so he's always looking for an excuse to be back in Singapore. But Calvin, you're in the unusual situation where people want to beat a path to your door. Is that what you're actually seeing? I mean, and Clifford said something very interesting. He said supply is the problem. I mean, that's what we're seeing too. But when you get a DCM banker saying it, that means something. So, is that what you're seeing as an investor? Do you have a shortage of places to place money in the frameworks that you're keen to pursue on the investment side? What's your take on this?
Sean, for us, the challenge is twofold. I mean, on the one hand, I think it's obviously trying to find credible green bonds to buy, and then I think the report kind of actually raised some interesting points. For example, the short tenor of and the small ticket sizes of the bonds typically that come out from emerging markets. So that makes it a bit challenging. The second thing for us that's a bit challenging is that because we invest in infrastructure, we're highly sensitive to the environmental social risk on the downside. We're actually building real assets, right? You got to move people around, you got to compensate people. It's not just about revenues, but it's about the building of assets, which in many cases might result in the destruction of natural capital assets. So that's the challenge of finding good projects and good project bonds and green bonds for us here in AIIB. But increasingly so. I mean, if this is a question, I guess, it's more of a statement than a question. I'm wondering whether as increased securitization of loans happens in Asia, increased liquidity of bond markets happens in Asia, whether we actually having a greater supply of these green bonds instruments in Asia. So it's a bit of a question actually for Clifford. I was wondering, you've obviously seen a lot more issuance of green bonds in Asia and helping companies issue them. But how much of it has to do with the fact that also that perhaps the loan markets are becoming much more sophisticated and companies now are issuing more fixed income instruments?
Well, I'll say that there are more bonds issued than before, but the liquidity in the bank market is still very ample, to your point. And you know that from AIIB, the challenge is that the market is so liquid, but the available instruments like we've been talking about green infrastructure financing for a long time. I mean, plausible green infrastructure financing in itself is already hard to find. And if you throw in a green label, and the demands that comes into it, it makes it even more challenging. That's why this report is interesting in that it helps us, the bankers, the issuers, also look in the right direction to know where to start. And from there, it can grow, and the both issuer and investor community, it can evolve. But what is sure now is that those issuers that has ESG concerns, they have been blocked out from the market. They can't issue, they can't tap the market, which is I would say a marked difference now than 5 years ago. So we are moving ahead. It's a matter of, and I would say the more supply we have, the more and the deeper the market can grow quicker.
Yeah, and I would just add that the report, because I had a glance at it, has a nice section about real estate and REITs in there as well. So good work by the team.
And in fact, we had a question about the real estate bond market in the chat. I just want to say to Letitia, in terms of how you see the European market, your prime focus, not your only focus, of course, do you see the property bond market growing in terms of this? I mean, we haven't got much in the way of climate aligned because of the mixed portfolios. Amanda, you might be able to correct me on that if I've made an error. How do you see this market growing? What's your perspective? And I'm especially interested in the climate aligned work that you've done and whether that's going to, be tied to a much larger market.
Yes, well, so in Europe, the context is very specific, and you know it because of regulation. So it's really driven by regulation, and I won't go into the details of each of them, but there are many regulations that surrounds or that would ask investors and other financial market players not only to disclose the level of investments in climate activities, but also to explain how they do it. And they will have to demonstrate their alignment, for example, to the EU taxonomy. So that's the regulation, Sean, that you mentioned. That is the definition of what is a sustainable activity or substantial contribution to an activity. So they are under pressure to demonstrate that. And when they have products, they also have to demonstrate the sustainability and also climate alignment to these products. And they have to produce a number of disclosures. Looking at, so that's in their capacity of investors. In their capacity of just being a corporate, they also fall under regulations. So they fall under the, as Amanda said, the CSRD, which is the non-financial disclosure directive that has been updated recently. So as a corporate, they have to explain how they contribute to climate. As investors, they have to contribute as they to demonstrate, how they contribute to investing in climate. And at product manufacturers, they also have to demonstrate that. So there are really a lot of challenges in there. And that's why we believe that in Europe, that specific aspect around climate, and that's why we really like the idea of the climate aligned issuers, the specific aspect around climate is booming. There's not enough investment opportunities in the bond area, in the equity area neither. And so really that's what we're trying to do again with the stock exchange, is to cater for market needs. We want to be a platform where investors and issuers can meet and explain, and we observe that investors are much more knowledgeable on those topics than they were before. So explaining the difference now between a labeled product and a non-labeled product is much more easier than in the past. At least in Europe, and for European investors, it's easier to explain. And so we really see that now they can understand, they can mix the portfolios, they can include labeled products, they can include unlabeled products, but they understand the differences and they understand the differences in disclosures. So it's really in Europe a big drive around those kind of aspects.
What Letitia is referring to in terms of regulation is the EU taxonomy and the disclosure regime, which by which every investor, corporation and bank in Europe will need to start disclosing in a formal disclosure to the regulator each year their sustainable investments, as well as their high carbon investments as part of the progress. It's going to take another year and a half or so to come into full force, but it is doing two things. One is it's really promoting disclosure, which is a question I've got. Will better disclosure lead to improved discovery? My assumption is it will. I'm curious to know from other markets' perspective what people think about that. And it's also promoting a common language. So we have, for the first time in Europe, a common framework to define what is a climate investment or rather a sustainable investment, and comparability, which hasn't actually been there. So, you know, if AXA or Allianz make a claim, let alone Unilever, we're going to have a common framework to be able to compare, is it sustainable and how do they compare to their peers and so on. So it's a pretty big development, Laetitia, isn't it, in terms of...
Yeah, and what's important also is in those regulations, they include two very new concepts. And that they say that the data should be as much as possible forward-looking and science-based, which is absolutely key when you talk about climate as well.
Exactly right. If you want to find a bit more about this, we're running a series of webinars with EU taxonomy at the moment. And of course, next Monday and Tuesday, we'll see the launch of the framework for social taxonomy, part of that broader taxonomy, and a framework for significant harm taxonomies, the sort of negative screen. It's a work in progress, but I'll be comparing those as well in my European Union platform hat as distinct from CEO of the Climate Bonds Initiative. There's a lot happening, but of course, a lot is happening in other countries too. We've seen Clifford MAS bring out guidance around taxonomy. And of course, we have the central banks of ASEAN working together on setting up a taxonomy board. Do you think that the disclosure discussion, which is live in the region, will lead to more discovery and further pressure to do the positive thing in this area? And any other regulatory steps you think we need to be aware of?
Yeah, I mean, Sean, like what you said, the natural assumption is that it has to, right? Because the important thing is to agree on a lens that everybody can refer to, and from there build towards adherence and adoption. But like, again, there is a risk of over-regulating at too early a stage, I'd say, across Asia, because Asia is fragmented. Asia is, in a different phase. That's why I said earlier on what I said, that this report will be very encouraging to many in Asia to realize that there are activities, revenues that already align, climate aligned, and they just have to fine tune it and grow so that other people can follow. So there is, I think, an increased disclosure, more standardized disclosure would definitely lead to more awareness and more understanding and more ways of adoption, right? But it has to move at a pace that supports the economy, the social concerns over and above the climate concerns, which is real in emerging market situations across Asia.
In terms of growth of underlying assets, you know, we hope that the commitments of this year for 2030 targets and so on will lead to a lot more growth. But there's a question mark around that. You know, I mean, we saw the hold of the high-speed rail between Kuala Lumpur and Singapore for reasons unrelated to its climate focus, we appreciate, but nevertheless, it's a rail project that got stopped. In Europe, Robert, with the Resilience and Recovery Fund, which is a 750 billion euro stimulus package, which is resilience investments and green investments. In fact, it's going to stimulate 225 billion euros of green bonds issued by the European Commission on the back of that to grow. Do you see a change in the forecast for the investments you're making? Is the pipeline changing? Do you think it's going to increase in terms of demand for financing? And of course, from our perspective, affect the hopefully bring in more green bonds and climate-aligned bonds to market. Is this real, or is this just still something that's work in progress?
Yeah, that's also a difficult question. I'm not a central banker and I don't know exactly what they are doing. But of course, with this buying of central banks and official institutions into the green bond, and if they really want to adapt also their investing strategy a little bit more from, let's say, pure monetary focus also to what is the impact on their investments, they will also shift into exactly this segment. And of course, then you will see more buyers from official institutions into our green bonds as well. So maybe Clifford already mentioned it, the supply of green bonds is less than basically the demand, and if central banks and official institutions invest more in this kind of assets, they focus on sustainability in their investment decisions, then basically you will increase the demand and not the supply side. And that's basically then also when the issuer have to catch up on the supply side in order to meet the demand.
And we
I
had
hope that
Jens.
answered you.
Sorry, go ahead.
No, I hope that answered your question.
No, thank you. We had Jens Weidmann, the head of the Bundesbank, come out recently and support, after a long time of not supporting, the idea of green quantitative easing, which Christine Lagarde at the European Central Bank has been talking about. And so, you know, to your point, that will stimulate further demand on the back of it, which of course has got a flow-on effect. The challenge is supply. So folks, what do we do about supply here? How do we get more to the market? Clifford's had a go at talking about it, given some idea. Letitia, you need a vast green exchange. We all want you to have a vast green exchange. What do you see as the work we can do in Europe to further flush out supply and to bring more people to market? I'm hoping you've had some success recently. I know you've had the listing of the European Social Bond on the Luxembourg Exchange, and the European Green Bond is expected to be listed on the Luxembourg Exchange. But like they're the ones you'd expect. I'm now interested in the other green or climate aligned companies and how we bring them. Do you think there's things we should be doing beyond what we're doing to grow this market now to meet our climate objectives? Any thoughts?
Yeah, well, there are two things that come to my mind. The first one is we need to continue to raise awareness. So we tend to believe, because we talk together and we are all from the same sector, that everybody understands. But in reality, there's a lot of awareness that needs to continue to be done, not only on the specific labeled bonds, but also on the unlabeled side, and also more specifically on the climate aligned issuers. There's a lot of explanation still. I said that investors are more understanding it, but still, we need to explain what it is. We need to explain how it translates into non-labeled climate aligned bonds. So there's a lot of awareness. What we try to do also at the stock exchange is raising awareness, not only between issuers and investors, but we also talk to local banks in different countries. We talk to other stock exchanges. So we really try to embrace all of that and raise awareness about the topics. That's one thing. The second point is around reporting and data. And that's also an important point, I believe. So even if for the climate aligned bonds, there's less reporting and there's less data, we still need to be able to enable investors to meet their own reporting requirements. So there will still need to be some data, impact data, and disclosures around that. So really closing the knowledge gap and closing the data gap is something that is important to continue to foster sustainable finance and climate finance in the future.
And how important do you think harmonization of standards, such as between Europe and China, I've already talked about, but also Japan and Singapore and the Philippines and the US or Brazil for that matter. How important is that really, given you've got the tools to be able to assess these bonds? Is this going to make a big difference?
Yeah. So the fact that there are different standards, different definitions, different methodologies is something that we welcome as an exchange, because they are different regional needs and different regional definitions. So we can't just have one single definition of green, for instance. So we welcome all of that. Now, by welcoming it, we need to explain it. So we need to be able to map those different standards. We need to be able to explain the similarities and the differences between the taxonomies, between the standards, so that the investors have sufficient information when they come to us, when they come to the stock exchange, and because they can freely see what kind of standards has been followed by the bonds. They understand what they are investing in, they understand the differences, they understand similarities, and they have a clear view on that. So it's not a bad thing that there are multiple standards, as long as they're explained.
Maybe just one word to add as well. If we speak about fixed income investment, we have metrics for interest rate risk, be it duration or whatever. We have metrics for credit risk, probability of default. And we also need some metrics which will develop over the long run, in order to assess the impact on the climate, on ESG topics. And then usual portfolio manager need to take into consideration as he or she does for interest rate risk, for credit risks, also the climate impact. So moving from a two-dimensional world into a three-dimensional, including, as I said, ESG topics as well.
I guess, Kelvin, that's what you were referring to, you know, not doing harm when you're doing good and making sure that we cover all those sort of issues. Has that been, I mean, this has been a concern of in the Asian Infrastructure AIIB, Asian Infrastructure Investment Bank. It should be 3 letters, not 4. We need to talk to Chairman Jin about this at some point, but for some time. How practical has this actually been in terms of uncovering this data and getting this information for you? I mean, is it actually real, or is it really hard?
It depends on the infrastructure or the project and the context, Sean. I mean, you know, in the process of not doing harm, obviously it depends on the particular asset that we're trying to finance. But clearly, we have a lot of emphasis on preventing harm, which demands of the borrower quite a bit of work to ensure that they have the right systems to prevent that harm. And for situations where we are investing in, say, instruments and so forth, the quality of information really depends on the lens in which you are trying to measure sustainability, all right, or climate alignment and so forth, right? So green revenues is one particular way that you can go about doing that. You can also look at ways in which a company is it has efforts on its capital expenditure to mitigate climate change risk, or transition away, or to deal with physical risks. So it really does depend, John.
Complicated. We're getting there. We need to be looking to wrap up. I'm after some final thoughts from you on how to take this forward and where this market might go. This is about climate investment opportunities. The Climate Aligned report attempts to tease that out, of course. I'm after that, and then I want to bring Yolanda in to make a comment about what she's heard today and where we think it might be going to take us out. So can I ask you just for a final thought for our listeners out there who are rescuing? And by the way, in the chat, you will see there's conversations around agriculture, around other areas, which are not, we haven't had a lot of visibility in the Climate Aligned report around investments in those sectors, but clearly land use and addressing land use is important. And we're looking at, we have rolled out at Climate Bonds criteria for agricultural investments, but it's a heterogeneous sector. It's challenging. So to our listeners, just, we've heard you. We need to be looking at those in other forums. But just from your perspectives going forward, and maybe I can just start with you, Robert, you're thinking about where this is going and what it actually means and the opportunities.
Look, for me, what is very important is that all investors shift the mindset. When we look historically, basically the investor asked, how long do I invest my money and with which probability do I get it back? And we all need to shift this mindset with a third dimension and what is done with this money. And be it with green bonds, be it with climate aligned issuer, but we need to think about the impact that we create with our money. And I think that's an important question. So what is done with our money as investors? And I think that's the most important part for me. And if we work on the green bonds, if we work on the climate bond initiatives, etc., that's all going in the right direction. And I don't know what the right way is to implement sustainability in the investment decision-making process, but it has to be implemented.
He's good, isn't he? Thank you, Robert. That's great. Very good. Well said. Clifford, your thoughts?
Well, I'd say that the market is really an evolving one, right? There isn't a agreed standard, agreed taxonomy across all the countries, but it is evolving and we're getting there. Like, as we said, the situation is in the past whereby this is looked upon as sort of something in the far future which we have to deal with next time. We've gone past that. Everyone is at this juncture of wondering what else they can do and how quickly they can do it. And that is encouraging from this space. So awareness, guidance on best market practices, on realistic best market practices, and the transitional steps that's needed to go there is what we're focusing on across Asia to get our issuers across the line, and also for investors to get across the line. So whatever was looked upon sometimes from an investor standpoint, from an issuer standpoint, with skepticism in the past, has now been better accepted. And you see the markets reacting. And I believe that, as I said, the momentum is picking up to a point whereby there's really no turning back. Is really the transition will take place at a much faster exponential growth in the very, very near future. So we're very excited to see what else we can do to help, and to, of course, learn from Europe and US on what their own journey, and to see what to expect out of Asia. It won't be a similar one for one, but there'll be lessons to learn and best market practices to adopt so that we can move faster than otherwise.
Fantastic, Clifford. I look forward to the sustainable business in the DCM side overwhelming the bank with its excitement and size. It's great to hear your interest and enthusiasm. Letitia, from your perspective, some final reflections.
Yes. So, well, my reflection is that investors cannot only look at instruments anymore. So they also need to look at the issuers. They can't close their eyes on that entity that is issuing those bonds. They have to combine those two approaches, looking at the instruments and looking at the entity. And there are much more untapped opportunities that they are aware of if we're looking at the climate-aligned issuers. Our role here is to give visibility on that. The role of CBI is to give credibility on that. So we really hope that we can foster the market towards more investments in climate.
Let's hope so too. And thank you. And Calvin, final thought from you in the middle of one of the newest, most exciting investment development banks in the world.
Well, it's hard to top off that, but maybe I'll say something in Chinese, which is 长江后浪推前浪, which means that wave after wave is coming onto the shore. And I think this is it's not death by 1,000 cuts. That's not. I don't think it's. But you can see it happening, guys. Right? There is a clear accounting failure when it came to climate change, which is what Robert alluded to. We've got to go beyond just the traditional metrics, how we value things. And now we have very strong political signals by very major countries to hit net zero targets, right? So there's a whole ecosystem of things happening together. So got to be on the change, otherwise the change will be on top of you.
Nicely put. Amanda, the author.
Yeah. So the way that I see it in terms of practical sort of next step is that the universe that we discovered really offered opportunities to scale up the label bond market. And if we look at the climate aligned issuers, about 30% have actually already issued with the label, which means that they already discovered some of the values which the label brings. And the way that I see it is that we need to scale up investments toward climate change solutions, and that's clear, but we need to be able to identify them. And for instance, the green bond market really offers this venue where the transparency is sufficient to provide some sort of assurance to investors. So I believe that for climate aligned issuers that yet haven't issued in the labeled bond market, the exercise of actually labeling their debt and going through their own assets in their activities is a very beneficial exercise to understand what they're actually financing, and also to sort of evaluate their transitional risk going towards 2050. So I think the way that I see it is that approaching the labeled bond market is one way of doing your own internal due diligence. But in the long term, as long as the disclosure is harmonized, then I think they will be sufficient to an extent for investors and for stakeholders to actually identify what's being financed.
Thank you. Yolanda, are you happy? Does it look good? Is this conversation working?
Well, I would say that I strongly encourage issuers in the audience to really get ahead of regulations and tap into the investor interest in climate-aligned issuances. We know that in Asia, with Singapore, ASEAN, Japan, Malaysia coming out with the taxonomies, very soon we're going to be following Europe's steps to have the declaration in the same way that we have to declare whether we are vaccinated when we go to a football stadium, to go to a concert. I think in the very near future, issuers would have to be asked to declare, are you aligned to a taxonomy, to climate mitigation and adaptation or not? So it is advantageous to get ahead of the game.
Great point, Yolanda. Fantastic point to make at this point. And I've got my COVID pass here, my vaccination pass. I'm hoping to get to a football match soon. So every issue could be a beautiful metaphor. We need to wrap up, everyone. Yolanda, I need to say thank you very much, DBS, for the support you've given this report and making it happen. And also, thank you for allowing us to have a pivot to Asia, a stronger pivot to Asia as part of this process. Of course, it's a global report. It's everywhere. But part of what we need to do is to get the discovery process going across all markets as we seek to build a world that is more sustainable for our children, as well as more sustainable for our investments. That's what this is about. Thank you again. Thanks to all our speakers, to Amanda, to Robert, to Clifford, to Calvin, to Letitia. And thank you, everyone who's been listening into this event. We've got a lot to do. It's a short amount of time to get there. The IPCC is 2030. It's a target. The clock is ticking. We are on the road. You've heard today about how we've started. You've heard Calvin talking about wave after wave. But we all have a role to do. Good luck. Good luck in creating that future that we will be fit for our children to live in. Thank you, everyone. This webinar will be recorded. There will be a repeat tomorrow at 8 a.m. Paris time or 2 p.m. Singapore time for different time zones. If you want to hear a slightly different mix of speakers. But of course, you can get the recording on YouTube or on the Climate Bonds website. Above all, read the report.